and that is AJ's pick of the week. Everybody wants to know, AJ, you've got all this data and you've got all this information. What are you looking at this week as your pick of the week?
Well, I'm gonna pivot a bit. So traditionally, I like to sell what's called time decay premium. This is profiting on not directional moves because underlying symbols, guessing what direction they're going to move is almost like a crapshoot, right? You might as well go and play some gambling at the casinos. So I like to profit on something that's more consistent, which is that an option will decay very reliably with time. Its price will decay very reliably with time. And if time all of a sudden stops, if a minute, 60 minutes doesn't equal an hour, if 24 hours doesn't equal a day, I think we've got more to worry about if time is not moving the way it's supposed to than our investment portfolio. If that happens, it means like the earth has stopped rotating and we're going to die. So time is very reliable, and that's what I invest in. Well, I'm going to pivot today with my pick of the week. I'm going to look at Microsoft, and it's not because I want to sell premium at it against it, because it's quite expensive. Actually, it's a stock that's trading somewhere around $237 per share. This is an earnings play, right? And so a lot of people, when I say earnings play, their mind goes to, oh, he has insider information and he can guess which way investors are going to go when they report earnings. They're supposed to report earnings, I think, after market close on Tuesday. So next week, let's just make sure. Yeah, after market close on January 24th. But first of all, I have options. Options allow me to profit on all sorts of different patterns, not just price direction. And so here's my little pivot, and here's my little thing. When you think about earnings plays, I want to always figure out what is the most reliable pattern that with almost 100%, nothing's 100%, but almost 100% reliability is going to happen. So it's not going to be that prices go up or prices go down. In fact, earnings season is known for unexpected surprises. So I don't want to guess direction. So when most people say AJ's playing earnings plays, they go traditionally to he's going to guess the direction. No. What the most predictable parameter on an earnings play is that right before the earnings play, there's going to be a lot of fear and confusion and uncertainty about what's going to happen. And right after the earnings play, that confusion and uncertainty goes away because earnings is released and all of a sudden we can have certainty again. Guess what? Options can profit on the difference between how uncertain we are one day and how certain we are the next day. And the way we can do that, and we can factor out whether the stock goes up or down by simply doing some interesting option strategy. And for you guys that have some experience, this is called a calendar spread or a horizontal spread. This is where we buy an option that's far out in time, probably about 6 months out in time, and then we sell an option that's only about a week, at the most 2 weeks from expiration. They're going to have the same strike price. Usually I pick something that's at the money. So in this case, it'll probably be about $240 strike price. And I'm going to do that literally the day of earnings. In this case, Microsoft is releasing earnings Tuesday evening. So on Tuesday, I'm going to be looking to buy a calendar spread that we'll use. Let's look at the different expiration dates. We'll probably use the June 16th. And you can come down here. You can see $240. And what's nice is with a calendar spread, you're actually factoring out the directional component of the underlying symbol price. And so that means it doesn't matter whether I use a call or a put. I'm canceling that out. So it doesn't matter whether I use the call or a put. I can either go with calls or puts. It's besides the point. So I buy the June 16th, 240, and then I sell maybe the January 27th or the February 3rd, 240. And that's going to create a trade. And I do that on Tuesday. And then on Wednesday, after earnings was released Tuesday evening, I can sell that thing. And the drop of fear, a very consistent pattern when it comes to earnings, I've been making about anywhere from 13 all the way up to 25% return. I would recommend, if people are interested in this kind of trade, take a moment and do some paper trading, do some back testing, prove this to yourself. Don't just throw money based on my, analysis. I want you to do your own analysis. But this is when you think about it, this is the reliable pattern to trade. And if you trade options, you can definitely take advantage of the fact that there's fear before earnings and there's less fear after earnings. And the strategy of that can work for you is a horizontal or calendar spread.